The next revolution is the We Revolution.
What do you get when you combine an ambitious startup, a charismatic CEO, and billions of dollars in venture capital funding? WeWork, the co-working company that promised to revolutionize the office space industry. But what started as a groundbreaking idea quickly turned into a cautionary tale of ambition, excess, and mismanagement. Join us as we unpack the rise and fall of WeWork and explore the lessons learned from one of the most spectacular business failures of our time. Welcome to this video on the rise and fall of WeWork. In just a few short years, WeWork went from a promising startup with a $47 billion valuation to a cautionary tale of excess and mismanagement. In this video, we'll take a closer look at what led to WeWork's downfall, the mistakes the company made along the way, and the lessons that can be learned from its story. From $47 billion to bust, the rise and fall of WeWork. WeWork was founded in 2010 by Adam Newman and Miguel McKelvey. The company's initial mission was to create a co-working space for entrepreneurs and freelancers who needed a more flexible and collaborative work environment. WeWork's early success was fueled by its innovative business model, which combined flexible office space with community-building events and services. As WeWork's popularity grew, so did its valuation. By 2018, the company was valued at $47 billion, making it one of the most valuable startups in the world. However, cracks in the company's foundation began to show as it pursued rapid expansion and attempted to go public. The We generation. What led to WeWork's downfall? There were several factors that contributed to WeWork's downfall. One of the main factors was the company's rapid expansion. WeWork opened new locations at a breakneck pace, often signing long-term leases on expensive real estate before the demand for its services had been fully established. Another factor was WeWork's reliance on venture capital funding. The company raised billions of dollars from investors, but it was never able to generate enough revenue to cover its expenses. WeWork's business model was based on long-term leases and short-term memberships, which meant that it needed to keep expanding in order to generate enough revenue to cover its costs. Finally, WeWork's corporate culture and leadership came under scrutiny in the months leading up to its downfall. The company's founder and CEO, Adam Newman, was known for his eccentric personality and unconventional leadership style. He also had a reputation for making questionable business decisions and putting his own interests ahead of the company's. How WeWork's ambitious vision became its demise. One of the things that made WeWork stand out was its ambitious vision for the future of work. The company saw itself not just as a provider of co-working spaces, but as a platform for a new way of working and living. WeWork's vision included everything from communal living spaces to private schools. However, WeWork's ambition may have ultimately been its undoing. The company's expansion into new areas, such as co-living and education, stretched its resources thin and distracted it from its core business of providing office space. In addition, WeWork's vision was heavily dependent on the company's ability to continue raising massive amounts of capital from investors. When the market turned against WeWork in 2019, it became clear that the company's vision was unsustainable. WeWork's tragic mistakes. Lessons learned from a startup's failure. WeWork's mistakes provide a cautionary tale for other startups and entrepreneurs. One of the biggest mistakes the company made was its over-reliance on venture capital funding. WeWork raised billions of dollars from investors, but it was never able to generate enough revenue to cover its expenses. Another mistake was the company's rapid expansion. WeWork opened new locations at a breakneck pace, often signing long-term leases on expensive real estate before the demand for its services had been fully established. Finally, WeWork's corporate culture and leadership were also major contributors to its downfall. The company's CEO, Adam Newman, had a reputation for making questionable business decisions and prioritizing his own interests over those of the company. The company's culture was also criticized for being cult-like and promoting excessive partying and excessive spending. The cult-like culture of WeWork. What went wrong? WeWork's corporate culture was one of the company's defining features, but it was also one of its biggest liabilities. The company's culture was often described as cult-like, with employees expected to be fully committed to the company's mission and lifestyle. This included participating in company-sponsored parties and events, often involving alcohol and drugs. WeWork's culture was also criticized for promoting excessive spending and extravagance. The company's founder and CEO, Adam Newman, was known for his lavish lifestyle, which included private jets and multi-million-dollar homes. Ultimately, WeWork's culture became a liability as the company faced increased scrutiny from investors and the media. The company's leadership was accused of prioritizing partying and lifestyle over the company's financial health, which undermined investor confidence and contributed to WeWork's downfall. WeWork CEO, from Israeli Navy to startup rock star to ouster. Adam Neumann, WeWork's founder and CEO, was one of the key figures in the company's rise and fall. Neumann was born in Israel and served in the Israeli Navy before moving to New York City to start his career in business. Neumann's early career was marked by a series of failed startups, but he eventually found success with WeWork. Neumann was known for his charisma and unconventional leadership style, which helped him attract investors and build a passionate following among employees. However, Neumann's leadership style also contributed to his downfall. Neumann was criticized for making questionable business decisions and prioritizing his own interests over those of the company. In 2019, Neumann was forced to step down as CEO after WeWork's disastrous attempt to go public. The shocking speed of WeWork's collapse. What happens next? The speed of WeWork's collapse was shocking to many observers. In just a few months, the company went from being one of the most valuable startups in the world to a cautionary tale of excess and mismanagement. After WeWork's failed attempt to go public, the company was forced to seek a bailout from its largest investor, SoftBank. SoftBank ultimately took control of WeWork and installed a new CEO, Marcelo Clar. Under Clar's leadership, WeWork has attempted to restructure and refocus on its core business of providing office space. However, the company still faces significant challenges, including a global pandemic that has upended the traditional office market, the rise of co-working, and the fall of WeWork, a cautionary tale. WeWork's rise and fall can be seen as a cautionary tale for the co-working industry as a whole. The co-working industry has exploded in popularity in recent years, with companies like Regus and Spaces joining WeWork and offering flexible office space to entrepreneurs and small businesses. However, the co-working industry also faces significant challenges, including increased competition and changing market conditions. WeWork's downfall serves as a reminder that even the most innovative and successful startups can fall victim to mismanagement and excessive ambition. WeWork's cash crisis. What went wrong and who's to blame? WeWork's cash crisis was one of the key factors that contributed to its downfall. The company burned through cash at an alarming rate, fueled by aggressive expansion and a lack of profitability. WeWork's business model was based on leasing long-term office space and then subleasing it to short-term tenants at a premium. But the company struggled to generate enough revenue to cover its rent payments. WeWork's cash crisis came to a head in 2019, when the company attempted to go public. Investors were alarmed by WeWork's staggering losses and questionable business practices, which included leasing properties owned by the CEO and using complex financial arrangements to inflate its valuation. Ultimately, WeWork's cash crisis was the result of a combination of factors, including overexpansion, a flawed business model, and questionable financial practices. Responsibility for the crisis can be attributed to the company's leadership, as well as its investors who enabled the company's unsustainable growth. SoftBank's $20 billion mistake, the WeWork debacle unpacked. SoftBank, the Japanese conglomerate, was WeWork's largest investor and played a key role in the company's rise and fall. SoftBank initially invested in WeWork in 2017, and by the time of the company's failed IPO, SoftBank had invested over $10 billion in the company. SoftBank's investment in WeWork was based on a vision of the company as a tech-enabled disruptor of the commercial real estate market. However, as WeWork's problems mounted, SoftBank found itself holding a large stake in a company with a collapsing valuation and no clear path to profitability. SoftBank's involvement in WeWork has been widely criticized as an example of the excess of the tech investment world, where large sums of money are poured into companies with little regard for their financial sustainability. SoftBank's $20 billion investment in WeWork is widely regarded as a mistake, and the company has since shifted its investment strategy to focus on more traditional industries. WeWork's rise and fall is a cautionary tale of ambition, excess, and mismanagement. The company's rapid expansion and aggressive business practices ultimately proved unsustainable, leading to a cash crisis and a failed attempt to go public. The WeWork story is a powerful reminder of the risks and rewards of innovation and entrepreneurship. While the company's failure may have been spectacular, It also provides valuable insights into what can go wrong when companies prioritize growth over sustainability and responsible leadership. We hope this series has inspired you to think critically about the role of startups and venture capital in our economy, and to consider what it takes to build a successful and sustainable business in today's fast-paced world. Thank you for joining us, and stay curious.